Hey everybody, Economic Ninja here. I don't think this person understands that they're actually sleeping in my YouTube studio, but let's just find out for fun. See if we start making some videos and all of a sudden a head pops up, they wake up and decide to drive away. Without further ado, we're gonna talk about stocks and real estate and what you should own during a market crash. Here we go. All right, everybody, how are we doing? I got my cardboard, I got my notes, we're ready to rock and roll. Let's do this. Let's see if these people wake up. All right, get this question a lot, and I thought I'd make a great video. The question is, in a market crash, in a downturn of an economy, in that cycle, as a cycle comes to completeness, it goes from, a down economy to an awesome economy, and it starts to head back down again. A normal economic cycle, okay? These happen all the time. They're on different wavelengths, different years, all this kind of stuff. We're not gonna get into that. But the question is, should I own real estate, stocks, or own nothing, okay? So we're just gonna break down a couple different variables. First off, stocks. How do you make money from stocks? Well, you only make it two ways. You either make it by buying low and selling high, or you make it through dividends, okay? And there's not a lot of dividend plays out there anymore. Now, there's two different types of stocks. There's a stock where a company issues a stock and I'm trying to be real general here, and there's so many shares outstanding, and then there's an ETF, an exchange traded fund, which really is just a bunch of derivatives packed into a prepackaged little product and then sold to you, right? And essentially all you're doing is you're buying exposure to a market, right? And I don't want to even get into the crazy debate, but the facts are they're derivatives. And if you don't know what a derivative is, you should look it up. It led to the crisis of 2008, and I believe in the future we're going to have a lot more crises. Is that even a word? Crises. Crises? Doesn't matter. So that's how you make money with stocks. Now, real estate, there's multiple different ways that you get to make money. First off, you have the amazing ability to write off everything. I mean, there's so many expenses that are associated with real estate. You could literally, if done right, and you have the proper tax team, tax advisor, CPA, those are two different things, you can actually walk away without paying any money in taxes on real estate. So that's the way I look at it, is a penny saved is a penny earned. And I truly do believe that. A lot of people make fun of me about that. But like when I was, younger, saving money, trying to invest, and building my wealth, I drove around a little old Honda Civic, and the guys used to make fun of me while they're driving around their big SUVs and trucks that they couldn't afford, by the way. I paid cash for my little Civic, and I said, every time I fill up that tank, I'm saving money, because my car got 40 miles a gallon, everybody else has got 12, but man, they looked really cool with those big old spinning wheels. So every time you save money in taxes, you're earning money, you're putting money in your pocket. So another way you make money in real estate is that you could borrow against the appreciation. Obviously, this only happens when your real estate's appreciating and not collapsing down in price. But yet again, that is tax-free money that you can pull out and use for other investments or your lifestyle. Then the third way, biggest way that you make money from real estate is through cash flow. And that's really important. That'd be like on the stock side, having dividends. Cash flow is very important. A stable means of income, and the more real estate you own, the less risk you have, because by and large, if you purchase your real estate right and you have the right tenants in it, there's less likeliness of large amounts of people defaulting on their rent, so you can stabilize your cash flow. So my thing is first off, you don't lose anything in the stock market or in real estate unless you sell. Okay, that's something people need to realize. In 2008, I knew people that, let's say, didn't have the highest moral caliber, that literally walked away from their house payments because they had bought a house, let's say, for $300,000, and a couple years later that house is now worth $250,000. They literally decided to walk away, claim bankruptcy, destroy their credit rating, because they said, I am not going to pay payments for a house that's worth less than I paid for it. Well, that's very small-minded thinking, because if that same person would have held onto that house today, that house is now worth $550,000. Okay, and not only that, they walked away from a mortgage payment that was about how much they ended up renting a house for down the street. Complete tools. I'm not going to even sugarcoat that. People that think that's small shouldn't even be investing in real estate anyway. And that's why you guys are here. We want to actually separate the tools from the smart people. And just so you know, brains does not mean net worth, all right? I don't care where you are in life and what your net worth is, that does not equal your brains, okay? It's what you do with what you get is what equals your intelligence level. All right, so in a down economy, I believe that if I had to choose one, I would definitely choose real estate. But I have to give you a caveat here. In a down market, stocks get hurt, they get hammered by all kinds of different factors. And I believe that in the future, we're gonna see that again, okay? The stock market's not always gonna stay up. It always goes through cycles. Remember, in 2000, we had the dot-com bust from 99, 2000, and we saw the stock market eventually fall over about 50% of its value. The Dow lost 50%. The Dow also lost 50% of its value in 2008, 2009, okay? So right as it was just getting past the dot-com bubble, it just passed it, now it crashed again 50%. And if you look at a chart right now, to say that today, the crazy level of the Dow Jones, S&P, Russell, I don't care which indice you're talking about, it's gonna fall. It's gonna come back, right? Well, real estate's gonna do the exact same thing. However, people have to live somewhere. So if you buy the real estate properly, you get good tenants in there, tenants that are, you know, and we could do videos on how to screen tenants, but people that have good jobs and things like that, and you're able to, at worst case scenario, lower your rent to be able to meet people's needs. I had to do that a long time ago. We'll do some videos about that in the future, but you have a safety net. People have to live somewhere. And as long as you're not charging outrageous amounts for rent, you're not gouging them every year and raising the rates, that's something I never did because I didn't want to have to worry about the property. I wanted to be able to take my small cash flow and move on to the next one and the next one and the next one, rather than trying to jab somebody for a little bit extra rent, all right? I'd rather go and buy 5 more places and not have to worry about this place in my portfolio. All right, guys, so in a down economy, make a long story short, I would hold real estate, okay? Unless, like me, I go cash everything out and I wait for the big one, then I try and buy up a bunch. But if I'm gonna hold something in a down cycle, I would rather hold real estate over stocks. All right, guys, I hope you got something out of that. It doesn't look like anybody woke up right here. Ooh, look at this car. It's so tiny. It's like, I'm just gonna pick it up right now. I wish, like my editor, I could just go, that'd be cool. But anyway, fun with the video camera. All right, guys, with that being said, the Economic Ninja is out.